In this video, I'm going to show you a powerful scalping strategy that professional traders use to consistently profit from the markets every single day. What makes this strategy special is that it's incredibly simple. You don't need any fancy indicators, complicated chart patterns, or years of experience to use it effectively. In fact, this strategy only requires you to focus on a single 1-hour candle, and from there, you'll have clear entry and exit points for the entire session. Now, I know what you're thinking. How can a strategy this simple actually work? Well, the secret lies in understanding market psychology and how price behaves during key trading sessions. And to prove this isn't just theory, I'm going to walk you through real trade examples on Bitcoin, Ethereum, EUR/USD, and gold, showing you both the winning trades and the losing ones, because transparency is everything when it comes to trading. What's really powerful about this strategy is that even though it works great on its own, you can easily combine it with your existing trading system, whether you use price action, support and resistance, or trend-following methods. This could be the missing piece that takes your trading to the next level. So what exactly is this strategy? It's called the One-Hour Range Breakout strategy, and it's based on a concept that institutional traders have been using for decades. Let me break it down for you. The idea behind this strategy is simple. We identify the high and low of a specific 1-hour candle during a major trading session, and then we use that range to find high-probability scalping opportunities on lower time frames throughout the day. For the New York session, we're going to use the 8 a.m. to 9 a.m. Eastern Standard Time candle, which captures the pre-market institutional positioning right before the main session opens. Now here's the key insight. When retail traders see a breakout from this hourly range, they often jump in immediately, thinking they're catching a big move. But smart money knows better. They wait for what's called a false breakout or liquidity grab, where price breaks out briefly to trigger retail stop losses and entries, then quickly reverses back into the range. This creates a perfect opportunity for us to enter in the opposite direction and ride the reversal. The beauty of this strategy is that we can scalp these setups on very low time frames, the 1-minute and 3-minute charts, which means we can capture quick profits multiple times throughout the day. And it works across all major markets: crypto, forex, commodities, you name it. So let me walk you through the exact 3-step process to execute this strategy successfully. Step 1 is all about identifying the 1-hour range correctly. Here's how to do it. First, you need to decide which trading session you want to trade. There are 3 major sessions: the Asian session, which opens at 6 p.m. Eastern Standard Time, the London session, which opens at 3 a.m. Eastern Standard Time, and the New York session, which opens at 9:30 a.m. Eastern Standard Time. Now, you can apply this strategy to any of these sessions, but personally, I prefer trading the New York and London sessions because they provide the best volatility and the cleanest price action. The Asian session can work as well, but it typically has lower volume, which sometimes leads to less reliable setups. For this video, I'll focus on the New York session since it's the most popular among traders. But remember, the exact same principles apply to the London session or any other session you choose to trade. For the New York session, we're going to use the 8 a.m. to 9 a.m. Eastern Standard Time candle. This is the hour right before the stock market opens, and it's when institutional traders are positioning themselves for the day ahead. This makes it an incredibly important reference point. So here's what you do on TradingView. First, make sure your chart is set to the correct time zone. Go to the bottom right corner, click on the time zone setting, and select New York time. This is crucial because we need to be working with the correct session times. Next, set your chart to the 1-hour time frame. Now, locate the candle that formed between 8 a.m. and 9 a.m. Eastern Standard Time. This is your reference candle. Take note of the highest point, the high, and the lowest point, the low, of this specific candle. These 2 points define your 1-hour range. Draw a horizontal line at the high and another at the low, and extend them across your chart for the rest of the trading day. This is your 1-hour range, and everything we do from this point forward will be based on how price interacts with these 2 levels. One important note: make sure the 8 a.m. to 9 a.m. candle has fully closed before you mark your range. Don't try to predict where the range will be while the candle is still forming. Wait for it to completely close at 9 a.m., then mark it. Patience here is critical. Now we move to step 2, which is where we identify our trading setup on the lower time frames. This is where the strategy gets really interesting. After you've marked your 1-hour range, switch your chart to either the 1-minute or 3-minute time frame. I personally like to use both. the 1-minute chart for more frequent opportunities and tighter entries, and the 3-minute chart for slightly more conservative setups with better confirmation. You can choose whichever time frame suits your trading style, or you can monitor both simultaneously. What we're looking for is a false breakout pattern. Here's how it works. We wait for price to break above the range high or below the range low on our lower time frame chart. But here's the key. We don't enter on the breakout itself. Instead, we wait for the breakout to fail. A failed breakout looks like this. On the 1-minute or 3-minute chart, price breaks above the range high and closes at least one full candle above it. This gets retail traders excited, and many of them will buy, expecting price to continue higher. But then, within the next few candles, price reverses and closes back inside the 1-hour range. That's our signal that it was a false breakout. And now we're looking for a short entry. The same principle applies in reverse. If price breaks below the range low, closes beneath it, and then reverses back inside the range, that's a signal for a potential long entry. Now, here's an important rule. The setup must form within the next 3 hours from the closure of the 1-hour range candle. So if your range candle closes at 9 a.m., you're looking for setups that occur between 9 a.m. and 12 p.m. This 3-hour window is when the strategy works best because it captures the most volatile and predictable price action following the range formation. After this window, the reliability of the setups decreases significantly. Step 3 is where we actually enter the trade and manage our risk. Let me break down the exact rules for entries, stop losses, and take profits. For a short entry, once we've confirmed that price broke above the 1-hour range high and then reversed back inside on the 1-minute or 3-minute chart, we enter short on the next candle. Our stop loss goes just above the highest point of the breakout move. For take profit, I use a minimum risk-reward ratio of 2-to-1. For a long entry, once price breaks below the 1-hour range low and then reverses back inside, we enter long on the next candle. Stop loss goes just below the lowest point of the breakout move. Take profit is set at 2-to-1 minimum. Now here's something important about trade management. Because we're scalping on such low time frames, you can get multiple opportunities during that 3-hour window. Each false breakout is an independent setup, so you can take multiple trades as long as each one meets all the criteria we've discussed and occurs within the 3-hour time frame. However, there's one rule I follow religiously. I never take more than 4 trades per session on the same pair or asset when using the 1-minute chart, and no more than 3 trades when using the 3-minute chart. Why? Because if we're getting excessive failed breakouts, it usually means the market is choppy and indecisive, and continuing to trade in those conditions often leads to overtrading and losses. Quick break before moving forward. If you're serious about trading and want to stop guessing entries, I built the exact tools I personally use every day. On the dtctools.com, you'll find our complete CCT and DTC strategy suite, including custom indicators, MT5 bots, and fully automated signals. And just to give you real numbers, in the last week alone, CCT took 7 trades, 4 wins, 3 losses, and still delivered 7.4 R total with a 2.6 average risk to reward. So even with losses, the system stays profitable. That's the power of proper risk management. Also, if you decide to grab any of the tools, you can use the code Telegram20 for 20% off everything on the site. If you want structure instead of stress, check the link in the description. All right, let's get back to the chart. Here I'm on the Bitcoin 1-minute chart with the 1-hour range already marked. Shortly after the range closed and our 3-hour window began, price started pushing higher and broke above the range high. Retail traders jumped in expecting a breakout rally, but within just a few minutes, price completely reversed and closed back inside the range. This was our short signal. We entered short with our stop loss placed just above the breakout high. Our take profit was set at twice the risk, following our 2-to-1 ratio. Price moved down steadily and hit our target in less than an hour. That's a clean 2R win, our first profitable trade of the day. Now let's look at gold on the 3-minute chart. Within our 3-hour window, price broke above the range high and closed below it. That's our short signal. We entered short with our stop loss positioned above the breakout point and take profit at 2-to-1. Then price tried to push higher but failed and reversed back into the range. Price dropped fast on the 3-minute chart and hit our target within the next few candles. Another 2R profit, clean and simple, moving to eurusd on the 3-minute chart. Within the first hour through our 3-hour window, price broke above the range high on a 3-minute candle and pushed even higher. Then it struggled and eventually reversed back into the range. This gave us a short setup. We entered short with our stop loss above the breakout high and our take profit set at 2-1. However, this trade didn't work out. Price consolidated for a while, then reversed against us and hit our stop loss. That's a 1-hour loss. I'm showing you this because losses are part of trading. Not every setup will be a winner, and you need to see the reality of how this strategy performs. Now, I want to be very clear about something. These results are from a limited sample size. To truly validate any trading strategy, you need to backtest it over hundreds of trades across different market conditions. What I've shown you here is proof of concept, evidence that the strategy works and has solid potential. But I highly recommend you do your own backtesting and forward testing before risking real money. Before we wrap up, let me give you some tips to optimize this strategy even further, especially when it comes to choosing between the 1-minute and 3-minute charts. First, understand the differences between these time frames. The 1-minute chart will give you more trading opportunities throughout the 3-hour window. You might get 3 to 5 setups on a good day. However, it's also more susceptible to noise and false signals, and you need to be very quick with your execution. The 3-minute chart provides fewer setups, usually 2 to 3 within the window, but they tend to be cleaner and more reliable, with less noise. I recommend starting with the 3-minute chart if you're new to this strategy, then moving to the 1-minute chart once you're comfortable. Second, pay attention to the width of the 1-hour range. If the 8 to 9 a.m. candle has an extremely narrow range, less than 0.15% of the asset's price, be cautious, especially on the 1-minute chart. These tight ranges often lead to choppy, difficult-to-trade conditions. Conversely, if the range is very wide, more than 1% of the asset's price, the 3-minute chart might give you better, clearer signals than the 1-minute. Third, use confluence with other support and resistance levels. If your 1-hour range, high or low, aligns with a significant daily or weekly level, the false breakouts from these zones tend to be even more reliable. This is where combining this strategy with your existing knowledge of price action can really boost your results. Fourth, respect the 3-hour window strictly. I cannot emphasize this enough. The best setups occur within those first 3 hours after the range closes. After the window ends, the quality of setups deteriorates significantly, and you're much more likely to encounter choppy, unreliable price action. Stick to the window and you'll avoid most of the low-probability trades. Fifth, watch for volatility. On days with major economic releases like NFP, CPI, FOMC, or other high-impact news, this strategy can be less reliable because price action becomes more unpredictable. I generally avoid trading this strategy on high-impact news days, or at least I reduce my position size significantly and stick to the 3-minute chart for better confirmation. And remember, while you can apply this strategy to the Asian, London, or New York sessions, I personally prefer the New York and London sessions because they consistently provide the best combination of volatility and clean price action that makes this strategy work at its best. So there you have it, the 1-hour range breakout strategy broken down step by step, with real examples showing you exactly how it performs across different markets and time frames. This is a strategy that professional traders have been using for years, and now you have the complete blueprint to start using it yourself. Remember, the key to success with this strategy, or any strategy, is consistency, proper risk management, and discipline. Don't overtrade, don't revenge trade, and always stick to your rules even when emotions are running high. Whether you choose to scalp on the 1-minute chart for more opportunities, or use the 3-minute chart for cleaner setups, the principles remain the same. And most importantly, respect that 3-hour window. It's what separates high-probability setups from low-quality trades. Before we wrap up, just a quick reminder. If you want to get access to our advanced tools, you can visit us at thedtctools.com. If you want the same indicators, MT5 bots, and automated signals, you'll find them there. And you can use code TELEGRAM20 for 20% off. Links in the description. If you enjoyed this breakdown and want to see more content like this, make sure to join my free Telegram community where I share daily market analysis and trade setups with my subscribers. I break down setups just like the ones you saw in this video, but in real time as the markets are moving. You can find the link in the description below. Also, if you're looking for a reliable trading prop firm, I highly recommend checking out the Instant Funding Firm. Right now, they're offering 18% off on all their prop accounts. You can find that link in the description as well. Thanks for watching, and remember, trading is a marathon, not a sprint. Focus on making consistent, high-probability trades within your optimal trading windows, and the profits will follow. I'll see you in the next video.